So we're going to do today manufacturing accounts. We're going to handle manufacturing accounts. So right there, manufacturing accounts. Manufacturing account. Manufacturing accounts. So that is what you're doing today. And then you write a manufacturing company. Manufacturing company, it's a company. For manufacturing businesses, for manufacturing businesses, the manufacturing costs are divided into the following types. The manufacturing costs are divided into the following types. Number one, we have what we call direct material cost. Direct material costs. Direct material costs. i.e., that is, materials can be identified in the final product. Materials can be identified in the final product. Materials can be identified in the final product. Materials can be identified in the final products. So that is what we're talking. So the first cost here we're talking about is material cost. You don't write this one. For instance, if you're manufacturing timber, if you're manufacturing furnitures, that is your manufacturing business. You manufacture, your products are furniture, isn't it? So materials will constitute timber, nails, glue, those things, isn't it? So that is the first cost. Number two is direct labor cost. Direct labor cost. Direct labor cost. Direct labor cost. So these are wages paid to those. These are wages paid to those. These are wages paid to those. These are wages paid to those who are directly involved in the manufacture of a product. Who are directly involved in the manufacture of a product. So, and then number three, we have direct expenses. Direct expenses, number three, direct expenses. Direct expenses. These are expenses. These are expenses. These are expenses that must be incurred in the manufacture of a product. That must be incurred in the manufacture of a product. These are expenses that must be incurred in the manufacture of a product. So NB, the sum of all the direct costs known as the sum of all direct cost. The sum of all direct cost is known as prime cost. It's known as prime costs. The sum of all direct costs is known as prime costs. Sawa. And then cost number 4 is what we call indirect manufacturing cost. Indirect manufacturing cost. Indirect manufacturing cost. Indirect manufacturing cost stroke overheads. Indirect manufacturing cost stroke overheads. Indirect manufacturing cost stroke overheads. So these are any other expenses. These are any other expenses apart from the direct cost, for items being manufactured, e.g. cleaners wages, depreciation of plant and machinery, factory power and light, So NB, prime cost plus indirect manufacturing cost is equals to production cost or manufacturing cost, is equals to production cost stroke manufacturing cost. Manufacturing costs. So you're saying prime cost plus indirect manufacturing cost is equals to production cost stroke manufacturing cost. Stroke manufacturing cost. Are we together? And then we have number 5, cost number 5, we have administrative expenses. Number 5, we have administrative expenses. So these are expenses that are administrative in nature. i.e. that is incurred in the process of planning, controlling, and directing an organization. Planning, controlling, and directing an organization. E.g. office rent, office electricity, depreciation of office equipment, salaries, administrative salaries, admin salaries, etc. Admin salaries, etc. And then we have number 6, we have what we call selling and distribution expenses. Selling and distribution expenses. Selling and distribution expenses. Selling and distribution expenses. So these are expenses incurred in the process of selling. These are expenses incurred in the process of selling. These are expenses incurred in the process of selling. These are expenses incurred in the process of selling, promoting and distributing the goods manufactured. Promoting and distributing the goods manufactured, e.g. advertisement, e.g. advertisement, carriage outwards, depreciation of motor van, depreciation of motor van, depreciation of motor van, salesman salary, salesman salaries, etc. And then lastly, we have what we call finance cost. Lastly, we have what we call finance cost. Number 7. Is it number 7? Finance cost. Finance cost. So these are expenses such as bank charges. These are expenses such as bank charges and interest on loan. Bank charges and interest on loan. So those are the expenses that we incur in the process of manufacturing items. We're saying the first expenditure there, the first cost is material cost. We're saying that is a direct cost. It's what we mean by direct cost that you can be able to identify it in the final product. And then we have labor. Labor is the cost that incurred on those people that are engaged in production of the products. Then we have indirect manufacturing costs. Direct manufacturing costs are those costs that you cannot be able to trace in the final product. Sometimes we call them overhead. So when you ask, do you know what is an overhead? An overhead is an indirect cost that cannot be traced in the final product. Here we have a table here. So we have the material cost. You can be able to know how much it costed to come up with this table, isn't it? And then whoever was engaged to make this table, it's very easy for us to tell how much it was paid. But there was some other costs that you cannot trace in the final this final product. Like for instance, the electricity where this table was made, we can't be able to tell how much was the electricity cost. The cleaner who cleaned the workshop, those are called indirect costs. Another name for that is overhead. So now the total manufacturing cost is a combination of direct costs and indirect costs. So another thing that you need to know under manufacturing is what we call treatment of loose tools, materials. Treatment of loose tools. Treatment of loose materials or loose tools. Loose tools. So when you're manufacturing, we have these small tools like bolts, nuts, you know them. Yeah, we know how to, so the loose tools consumed during the year is considered as a factory overhead. So you can write that the loose tools consumed during the year is considered as a factory overhead. The loose tools consumed during the year is considered as a factory overhead. The loose tools consumed during the year is considered as a factory overhead. And it is determined as follows. It's determined as follows: opening stock of loose tools, opening stock of loose tools, Then you add purchases of loose tools. You less closing stock. Closing stock, loose tools. So you get the loose cost of loose tools consumed. So apart from this, another thing that you need to know, and then we do a question, is what we call treatment of manufacturing profit. So right there, treatment of manufacturing profit. Treatment of manufacturing profit. Treatment of manufacturing profit. So right there, treatment of manufacturing profits. Treatment of manufacturing profits. So you can write manufacturing profit occurs, manufacturing profit occurs, manufacturing profit occurs where goods manufactured are transferred from factory to the warehouse, at a higher value more than the cost of production. At a higher value more than the cost of production. i.e. the market value. i.e. the market value. So the difference between the market value, and the cost of production is the manufacturing profit. So manufacturing profit should be added to the cost of production. The manufacturing profit should be added to the cost of production. Manufacturing profit should be added to the cost of production. In the manufacturing account, so as to arrive at the market value of goods manufactured, so as to arrive at the market value of goods manufactured, so as to arrive at the market value of the goods manufactured. The market value of goods manufactured, the market value of goods manufactured, the market value of goods manufactured should take the place of purchases in the trading account. Should take the place of purchases in the trading account. So the last thing, and then we look at the question, is what we call treatment of unrealized profit. 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 And then you write unrealized profit occurs, unrealized profit occurs, unrealized profit occurs where it is the policy of the firm to value stocks of finished goods at market value rather than cost. To value stocks of finished goods. To value stocks of finished goods at market value rather than at cost. So the difference between the market value and the cost of finished goods, the difference between the unrealized, so the difference between the market value and the cost of finished goods the cost of finished goods is the unrealized profit. Is a unrealized profit. And then lastly, the last sentence, the difference between the unrealized profit on opening stock, the difference between the unrealized profit on opening stock, the difference between the unrealized profit on opening stock, the last sentence, the difference between the unrealized profit on opening stock of finished goods, the difference between the unrealized profit on opening stock of finished goods, the difference between the unrealized profit on the opening stock of finished goods, on the opening stock of finished, and the unrealized profit on the closing stock of finished goods, and the unrealized profit on the closing stock, and the unrealized profit on the closing stock of finished goods should be charged to the profit and loss account. Should be charged to the profit and loss account. So those are things we need to know as far as manufacturing account is concerned. So now we want to look at a practical question. This question will give us we use the question to give the format. Use the question to give the format. So you can open with me November 2020 question number 4. CPA 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 November 2020 question number 4. So the question reads, Tamu Limited is a company that manufactures biscuits. The following trial balance was extracted from the books of the company as of 31st March 2020. So we've been given the trial balance there, and then additional information number 1. Accrued expenses as of 31st March 2020 was as follows: heating and lighting 3642, rent 6963. Note number 2, prepaid expenses as at 1st March 2020 was as follows: rates 9420, insurance premium 10080. Number 3, depreciation and respective allocation is provided as follows: building 2%, basis cost, expenses admin. Plant and machinery rate is 15% cost basis, and then expense factory. Office equipment, the rate is 10%, basis cost admin. Motor vehicles 25%, basis reducing balance distribution. Number 4, rent, rates, insurance, heating, lighting to be apportioned in the ratio of 5:1 in relation to factory and administration. Number 5, the director salaries include 20 million paid to the production directors and office salaries of 64 to 37,000 paid to the salesman. Number 6, allowance for doubtful debts to be maintained at 1% of the accounts receivable at 1st March 2020. Number 7, inventories as at 1st March 2020 was as follows: raw materials 56,200, work in progress 47,160. Number 8, the factory produced 1,500 units, only 1,100 units were in the inventory as at 1st March 2020. Lastly, corporate tax for the year ended at 1st March 2020 is estimated to be 100 million. So required: A, manufacturing account for the year ended at 1st March 2020, and B, statement of profit or loss for the year ended at 1st March 2020. So this is the format. So write there Tamu Limited. Write there Tamu Limited. So we have manufacturing income statement. Manufacturing income statement for the period ended. 31st March 2020, and then you underline. So you can have 2 columns, shillings and thousands, and then here shillings and thousand. So we start with the manufacturing account. Manufacturing account is the account that you prepare to determine the cost of production, the manufacturing cost. So you start with the opening stock of raw material. You start with the opening stock of raw materials. You start with the opening stock of the raw materials. So you just follow. The only thing that I will need you to do when you write and I write, sometimes you don't calculate. So I just want you to listen and you assist me to calculate, and then I'll give you sufficient time to write. Is that okay? So your work is just to listen and then do computation. Everybody should be prepared to do computation, identify those items that you are saying. So I want everybody to identify where we have the opening stock of raw materials. Can everybody see 210,000? Don't write. I'll give you time to write. 210,000. You've seen it, isn't it? So we have other items that accompanies raw materials, that they're also part of the raw material cost. Like for instance, we have carriage inwards and return outwards. So you check if we had carriage inwards and also if we had return outwards. So you check the trial balance if you have those two other items. They affect the. Do you have returns? Return inwards, but we don't have return outwards, isn't it? So in case we had return outwards, you deduct them from the purchases of raw materials. In case we had carriage inwards, you also add to the cost of raw materials. Carriage inward is the transport cost when you buy material to your place of manufacturing. Return inward is part of the material that are being returned back to the supplier. So they reduce the value of materials. And then you add, you add purchases of raw material. Sorry, this was purchases of raw materials. Purchases of raw materials. Can everybody see the purchase of raw materials? 55, 800, isn't it? So those items that I was explaining, supposing you had return outwards, you deducted from purchases. In case we had carriage inward, you add it to purchases, isn't it? And then you less closing stock raw materials. Closing stock raw materials. So this one you get is the additional information. This additional information number 7, which is 56,200. 56. So now we get the cost of raw material consumed. Cost of raw materials consumed. Cost of raw materials consumed. You add the opening stock plus purchases minus the closing stock. You get the material that were used in the production. How much is it? 1709 600. Is it correct? So that is the cost of raw materials consumed. And then you add direct labor or direct wages, or you add direct labor or direct wages. So you check if you have direct wages or direct labors or direct expenses, you add them. So in this question we have, so they're saying factory, is it factory overhead? Factory wages. Factory power, office salaries, insurance, advertisement. So in this question, they are calling it manufacturing wages. So they are calling it manufacturing wages. So you check if there is any note that is affecting manufacturing wages. We don't have any. So the total cost of manufacturing wages is 15,04200. And then now when you add this, you get the prime cost. You get the prime cost. Prime cost is the cost of material and labor. How much is it? 321? 321, 3? Like this. It's correct, isn't it? And then you add indirect manufacturing cost now here. You add indirect manufacturing cost or overheads. So you call them indirect manufacturing cost or overheads. Indirect manufacturing cost, you can list them in this line. We start with those ones that required adjustments. So note number 4. So we have rent rates in insurance. They are to be apportioned in the ratio of 5:1 in relation to factory and administration. So we have here rent. So you write here rent. So they are to be apportioned in the ratio of 5:1. So this is a factory. So 5 out of 6 And then you multiply by the rent cost that is indicated in the trial balance is how much? 570, 144. Can you see it? 570, 144. Is it so? 571. And then you adjust for rent, accrued rent is 69.63. You add plus 69.63. You adjust for the accruals. So in other words, this is the cost of rent now. And then 5 out of 6 is for factory. Are we together? So you adjust and then you take the portion that belongs to factory. So how much do you get? 480, 922.5. Is she correct? So this is the amount of rent that was paid, isn't it? It is found in the trial balance. True? We said if there is any accrued expense, we want what is paid. So we adjust for that so that we get the total rent paid for that particular period, isn't it? Remember how we treat accruals? Accruals are added to what is paid. What is paid is found in the trial balance. So you adjust in order to get the total expense for rent, and then 5 out of 6 is for factory. Tumeelewana? Accruals ni note number 1. Accrued expenses, ni kweli? So you need to know how to adjust for accruals, prepayments, depreciation. We talked about those things. Now we have been doing it severally. Si ni kweli? Five to 1, 5 plus 1 is in 6. So this expense that you're listing here is factory expenses. Tunaangalia kuanza na manufacturing account. So there's admin expenses, tutaenda kwa admin. Sawa? Tutaenda kwa admin. So in the meantime, we are still determining the manufacturing cost. We said manufacturing cost is a composition of material cost, labor, and overheads, isn't it? So we already determined the cost of material and the labor. This we call prime cost. Now we are listing indirect cost, which you're saying one of them is rent. So they are only saying it's factory, isn't it? So that one is indirect cost. Indirect costs are costs that you cannot identify in the final product, like rent. So to tumemalizana rent, we go to the rates. We go to the rates. Rates 5 out of 6, and then you multiply the one that is paid. The rate that is paid is how much? 60,348. And then we have prepaid rates of 94.20. So you subtract that one and then you adjust. How much do you get? Huh? 42,440, like that, isn't it? That is rates. And then we have insurance. So rather insurance, 5 out of 6 in bracket. The insurance that is paid is how much? 498,039. And then we have prepaid of how much? 10,000, 10,080. Iko. Inakuja ngapi? I'll give you time to write. Don't write, just participate in calculation and listening. This is very important. Company accounts and manufacturing accounts, they must, one question must appear in exam. Nakuja ngapi? 406, 632.5. Ako right. Tumemalizana na insurance. Tunaenda kwa heating and lighting. Heating and lighting. Heating and lighting, the one that is paid in the trial balance, how much? 180. 5 out of 6, 180, 342. And then we subtract, we add 36, 42. How much do you get? 153, 320. We are through with the heating and lighting, isn't it? So in other words, we are finished with the note number 1 in regards to manufacturing and number 2. So we go to depreciation. We go to depreciation. So we have depreciation. You have been told plant is a factory expense. Depreciation of plant is a factory. Even if you've not been told, depreciation of plant is always a manufacturing overhead. So we have depreciation plant, which is 15% on cost. 15%, the cost of plant is how much? 90,000. Can you be able to see that figure? At the beginning of the question, we have plant and machinery, 90,000. 15% of that one is how much? $328,500. Correct. So we are through with that one. And then, so that is the only one there. And then note number 5. Note number 5 says the director salaries include 20 million paid to production directors. So we have director salary. Director's salary. That one that was paid to the production manager. So the total the director salary is the one that is indicated in the trial balance. The total one is how much? 9306. So 9306. So out of that, 20,000 is for the production manager now, which is part of the factory overhead. So that one. So remember, we're only identifying factory expenses first. So we are through those ones. We are through the factory expenses that required adjustments. So we go and pick others that do not require adjustments in the trial balance. Like for instance, we have factory power. Factory power, how much is it? 90,042. That is a factory. And then we have insurance, rates, advertising, rent, plant maintenance. Plant, that is a factory expense. Plant maintenance, how much is it? 120, 189. Is it so? And then we have heating, that one, we are done with it. So I think we have exhausted the manufacturing costs. We have exhausted, apart from those ones that had been apportioned. These other ones had not been apportioned, but they relate to the factory. So we come and add them together with those ones that had already been apportioned, adjusted accordingly. So you adjust. In some other question, it will give you the rate. In others, they will give you the ratio. In this one, it was the ratio. So you add all this. Can we add this? Director salary, the total director salary that is indicated the trial balance, you said is how much? 93. So the total director salary indicated in the trial balance is 9306. So you're saying out of this amount, 20,000 is to the production director. Ule anasimamia mambo ya production huko, si ndio? We have two kinds of directors. We have directors who is administrative director, and production director. So you're saying the salary that is paid to production director should be part of the manufacturing cost, indirect manufacturing cost. So the remaining one should go to administrative. Is that okay? Provision. Provision means not yet paid. So you adjust the way we've adjusted here. You adjust the way we have adjusted here, then you share. So they've given you the ratio of sharing. So the provision means not yet paid, isn't it? Yeah. So can we add all this? How much is it? Put ngapi? 1402 16 for 1642 006 point. Yeah. Eh? Any other answer that is different from that? She's 1642 like this. Iko hivyo. Sawa sawa. So now you add this plus this. You get the gross manufacturing cost. Gross manufacturing cost. Gross manufacturing cost. So you add this plus this. Eh? 48, 45, 48, 55, 846, 846. So that is gross manufacturing cost or production cost. And then you add opening WIP. You add opening WIP means work in progress. Work at the beginning. Work in progress at the beginning is 378,000. And then you less closing WIP. Closing WIP is note number 7, which is 47,190. 47,190. 47,190. And then you get the manufacturing cost or production cost. Manufacturing cost or production cost. How much do you get? 51,86. 656. So up to that point, that is the manufacturing statement or the manufacturing account. So we have determined the cost of manufacturing. And the other, in some other question, you find that you don't end at this point. You also add a profit on the manufacturing cost so that you transfer the goods to the factory warehouse at market value. So where we have the manufacturing profit, you add the manufacturing. They can tell you 20% the markup. So the company's policy is to add a markup of 20% on the manufactured goods. So it means you add the profit on this manufacturing cost before you transfer. When you add the manufacturing profit here, you get what we call the market value of manufactured goods. In this question, the only one that has to end at this point, at the manufacturing cost. So this is what we call the manufacturing statement. It's very easy. You don't need to lose marks here. Tumeelewana? Twende kwa income statement. You go to the income statement here. So you don't need to write again income statement. You've already written here manufacturing income statement. So the normal statement now, you start with the sales figure. So this is a continuation. It's still running. Sawa. Sales ni ngapi? Sorry. So 7,800, 7,800, 441. Is that okay? Then you less return inwards. You less returns inwards. Return inwards is going up here. 45, 318. So you less 45, 318 here. So you get the net sales here. You get the net sales. So what is the net sales? $77.45, $77.55, $123. And then you compute here, you say less cost of sales. Cost of sales. So we have opening stock, finished goods. FG means finished goods. So you check the opening stock of finished goods, which is so 750,000. And then you add manufacturing cost. You add manufacturing cost. Where you have transferred the good at market value, you are, instead of manufacturing cost, use the market value of the manufactured goods. Where it is the policy of the company to transfer the manufactured goods at a profit, instead of using manufacturing cost, you use market value of the manufactured goods. So here we're going to use the manufacturing cost, which is 51,86,5,656. And then we less closing stock finished goods. That one we're going to determine. That one we're going to do. So determination of closing stock. Closing stock here. So determination of closing stock finished goods. So you have been told in note number 8. Can we go to note number 8? The factory produced 1,500 units. Only 100 units were in the inventory at that first March. So now the cost of producing 1,500 units, the cost is this one, 51,86,656. So this is the total units that were produced, and this is the cost that were incurred. So now the one that remained in the inventory at the end are 100 units. Now the question is, what will be the cost? If 1,500 units costed this, what about 100 units? So we cross multiply. So 100 times 51,866, is it 866 in your 56 over 1,500. So what do you get? 345. 345. 777. So that one will be the closing stock of finished good 3.06. So you can just round it off. 345, 777. What do you get? $55, 90, 379, 879. So we get the gross profit here. We get the gross profit, which will be how much? Where's just kiasi sauti yako bana? 21, 64, 244. So that one will be a gross profit. We check if we have any other incomes, like maybe discount received. Any other income we add, like discount received. Do you have discount received? So we don't have discount received. And then now we list our expenses. We start with the admin expenses. We start with administrative expenses here. So these are the expenses: rent, rate, insurance, heating. They were subdivided, they were portioned to factory and admin. Sinikweli. Easy expenses, but 1 out of 6. So to turn on rent. Rent 1 out of 6 times 570, 144 plus 69, 63. Hiyo ni admin. Sinikweli. So unapata ngapi? Sorry? 96,184.5. 96,184.5. 0.5. That is rent. Then we have rates. 1 out of 6 in bracket 60, 348 minus 9420. Hiyo ingine 84, 88, like that. So we go to insurance. Insurance, we have 1 out of 6. It was 48, 80, 39 minus 10, 0, 0, 80. How much do you get? 81.5. So that is, and then we go to heating and lighting. One out of 6, 180, 342 plus 36, 42. What do you get? 30, 36, 664. That is heating and lighting. So we are through with those expenses that were shared between the factory and admin in note number 1, 2, and 4. So we go to depreciation, office equipment. So building. So depreciation building, they're saying is admin expense. Depreciation building. Depreciation building is how much? 2% on the cost. That is admin expenses. 2%. What is the cost of the building? 390,000. 2% of 390,000 is how much? 7,800. So that is an admin expense, 7,800. And then depreciation office equipment, 10 costs. So depreciation office equipment, 10% of 330, which is 33,000. That is admin expense. So we are through the note number 3 in regard to admin expenses. And then we have allowance for doubtful dates to be maintained of the accounts receivable at 1%. So here we have allowance for doubtful dates. Allowance for doubtful debts, which is 1% of 1 over 100. This is working number 1. This is working number 2. So 1%, what is the accounts receivable? 1 million, which is how much? 15,000. So that is the closing balance. We compare the opening balance. The opening balance is how much? 3,000, isn't it? So we say increase in allowance for doubtful debt. Increase in allowance for bad debts, which is 15,000 minus 3,000, which is 12,000. Is that okay? Yes, isn't it? So we are through with the note number 6. And then we had director's salary. Director's salary. So we had been told the total director's salary was, how much was it? Where is this figure? Why am I not seeing it? Where is it? Oh, hapo karibu na hitting. 9306, isn't it? So 9306. So 9306 minus 20. 20,000 was taken to the production. So what? How much is that one? 72. Hivyo 72 7306. So hiyo ndio itarimania admin, si ndio? Haya, tumemalizana. Alafu tumeambiwa directors and office salaries of 37,000 paid to salesman, si ndio? So kuna office salaries. So tutatoa ya salesman's falls under distribution cost, isn't it? So we're going to write here salaries, office salaries here. Office salaries, the total cost is how much? 138, 031 or 081? 081 minus 64 to 37, 64 to 37. So that one was paid to what? How much is that? $138,081 minus 64,237. 73,8444. Yes. 64 imetoka note number 5. So we are through those admin expenses that require the adjustments, isn't it? So we go and identify others in the trial balance that do not require adjustments. Like for instance, we have general administrative expenses. General admin expenses. How much is it? 189,033. And then we have insurance rates, advertising expenses falls under distribution. Rent, we are through with it. Maintenance plan, we are through with it. Director salaries, we are through. Heating and lighting. That is finance. Transport expenses, that one will fall under distribution. Manufacturing, wages, accounts. So we are through with the admin expenses at that point. Salesman fall under distribution. Sawa. Tunaelewana? Remember we said these expenses can be categorized into those categories. We have admin, we have distribution, and we have finance. So you need to know those expenses that fall under admin. Sawa. Then you need to know those ones that fall under distribution. So we have distribution expenses here. Distribution expenses. So we start with those distribution. So we start with the salesman. Salesman salary. Salesman. How much is it? 64,237, isn't it? And then we have depreciation. Depreciation what? Motor vehicle, which is 25%. The cost is how much of the motor vehicle? 600,000, and then you deduct 240. That is a reducing balance, isn't it? So how much do you get? 50. Sijui kama tunapatana. Tuko salama, si ndio? Aya, nini ingine? So kuna transport pale. Transport expenses. Transport expenses ngapi? 255. And then kuna advertisement. Advertisement ngapi? 150. 513, si ndio? Tunaelewana? Advertising inafall hapo. Any other expense? And then here we list finance expenses. Finance finance costs or expenses. Finance expenses kuna gani? Kuna bank interest. Bank interest ni ngapi? 21 to 10. Nini ingine? $21 to 10, eh? So we have exhausted all the expenses, isn't it? I think we have exhausted all the expenses. There's none that we are yet to handle, to tackle. So all expenses at that point are done. So can we add all those, everybody to add? To add your one to the story. Let us add that one. Time for everything, isn't it? There's time for stories and there's time for classwork. There's time for eating, there's time for sleeping and everything, isn't it? $11.83, 6, 4, 5, like this. How many, is that true? This is correct, isn't it? I hope so. And then now here, we get what we call profit before tax, which is how much? 980, 589, like this, 599, 985, and then we go here because our space is not sufficient there. 985. Do we have tax? So less tax. Less tax. Less tax, how much? 880, 929, 559, like that. Tax ilikuwa ngapi kwani? So tax here ni 100. Tax was 100. Where is the tax figure? 100,000, isn't it? So this is profit after tax, isn't it? And then we have dividend paid. So you less dividend. You less dividend. Where is the dividend? Where is it? Interim dividend, isn't it? So we less dividend paid. Dividend paid, which is how much? 30,000. We don't have proposed dividend. Then you get the retained profit balance carried down. Retained profit for the period, which is how much? 880, 850, 599. Iso. Then you add retained profit balance brought down, retained earnings balance brought down, which is how much? $127, $425. So you get the retained earnings, balance carried down. Can you add that one? Retained earning balance carried down. Hoja ngapi? 978. 978.0. So that one will bring us to the end of that question. That one will bring us to the end of that. So they wanted us to prepare the manufacturing account. This is the manufacturing account. Then the income statement up to that point. Sawa sawa? So can we write it down? Can we write it down, please? To andike hiyo sana. I'm giving you now a chance to write. You have a question? Anyone with a question? Sorry? Yes. Provision I told you, kama ziko kwa trial balance, ni kama accruals. Inamaanisha haijalipwa. So una recognize. You deduct it from the profits here. Okay? And then provision inamaanisha iko kwa trial balance. Si tunasema iko kwa additional information. Kama ingekuwa kwa trial balance inamaanisha imelipwa. Hawezi sema provision tena, director's fee. Anything you find in the trial balance means it has been paid. So the provision, if there is any provision, it means not yet paid. So you find it in the additional information. So you recognize it, you add it to the other expenses, unaiweka hapa. Alafu unapeleka balance sheet kama nini? Liability. So sawa, if you can't find provision, director's fee in the trial balance. No, you only find it in the additional information, meaning not yet paid. Are we together? So you can write that